All right, everyone. Welcome to the live stream. I am going to wait to a few of you come on and welcome. Happy Sunday to all of you. So we would love to know where you are watching from. I'll give you a shout out in the comments. Now, let me be very clear. I just came back from a 7-day cruise and I am not feeling the best. Got a little bit of a cold symptom, just out way too late and what have you. I am running a slight fever, but I did not want to disappoint those folks in our club and my YouTube members as well. And YouTube, so I'm coming on. We're going to do about a 30-minute analysis. We'll look at about 4 or 5 charts, but you don't need to see this guy the rest of the way. So I'm going to be going off camera. I'm going to give you massive value over the next 30 minutes. And then what's going to happen is at around 5:45, we'll end the stream. We would have marked up 4 or 5 charts. And then if you are in our trading club, we're going to head back into that app, into the web browser, however you use the app, and we're going to go ahead and do our normal Sunday gap analysis, but we're going to do that exclusively for our trading club members in the app. So let's go ahead and start giving you some value here. Again, let us know where you are from. Hey, I appreciate that. It was good to go on a nice, beautiful 7-day cruise on the brand new icon of the seas. So hey, if this is your first time watching, welcome. I'd like to welcome you over here. And again, kind of what we're going to be doing today, just so you kind of get an idea who I am. If this is the first time that you have joined a live stream or watched any video, I'm a college business professor with over 15 years teaching in the world of leadership. And I've been an investor and trader for over 8 years. And like many of you, I struggled my first 3 years. That's really where the corner was turned for me, at that 3.5 to 4 year mark. And now fast forward 4 years later, very, very successful. And now I get to be a part of an amazing group, get to lead an amazing group, and we have some amazing people in our trading club as well. So again, if this is your first time here, again, let me welcome you officially to the Professor Trades. If at any point you get some value, you know what to do. You can hit that like button, you can subscribe, and if you turn on the notifications bell, you won't miss any live analysis or any other setups that we may share with you. Now, my goal for you today is very, very simple. Number one is we're going to start with crude oil. I'm going to review every time frame to help you succeed. We're also going to review natural gas and a few other bonus pairs as well. In addition, my plan for you today is very simple, that you learn the key zones for each chart, okay, and that you feel better about your trading decisions at the beginning of the week. Now, what's going to happen is that if you are, again, part of our trading club, you do not need to mark up these charts here live, because you know you're going to get these charts sent to you inside of our trade alert section. But if you're not part of our trading club, I would encourage you to check it out. You can see the website right down here below my name. Check it out. Come in and join us for less than $1 a day. You will be amazed about what we are doing in that club. And I will challenge you that you will not find the value you get for that price point anywhere. So come on in and check us out. So let's go ahead and start with crude oil here, okay? And then if you stick around for a few more minutes, I'm going to give you one of my free Renko guides for being here on the live analysis, just as a thank you to you. And I'm going to speak nice and slow because I know we have a lot of international people as well. And so welcome all around the world. We are sitting on the daily time frame. Okay, so the first thing that sticks out is, number one, is we have a structure point right here on oil. And we can see that we had this rejection here back on Friday, April 26th. And then over the last 3 or 4 days before market close, including last Friday, we had another rejection there. When we grab a Fibonacci level from this high and we swing it down to this low, we can see it is right at that sweet spot. So if you're in the club, you know we love that 78.6 area, and we are currently right here. Now, does this mean that we are bearish on crude oil? Absolutely not. And the reason for that is that on a big time frame, we still have broken these structure points, which are also known as Fibonacci levels. Okay, so the market hasn't opened yet, and today, Sunday, is not a day to trade unless we have a viable gap. And again, we will be covering those gaps in the app just before the market opens at 6 for the gaps on crude oil. So what do we have to look for here? Well, let's drop down 2 time frames and let's take a look at the 4-hour level. So you can see that these fib levels hold very, very well. And so one of the best things that you can do is squeeze your chart. because when you squeeze your chart, you can see how price action is moving. Okay, this move right here did the entire teacup move, gave us a handle, came back up to retest, and now we're at that second handle, or the M pattern that is being formed on the 4-hour. Is this a green light to go short on crude oil? Not yet. We have to really wait to break a key structure point. Okay, that key structure point to head back down into the 80s is actually going to be this level right here. We will need to see a close below this 80. I'm going to call it 82. It's 81.97, 94. So oil loves these round psychological numbers. Okay, but in the meantime, we have to look for points where we are still bullish on crude oil. If we take a look at this trend line right here, okay, we are kind of riding that trend line on the way up. So again, there is no clear move right now what crude oil is going to do. If we look at the invert, okay, if we look at the invert of crude oil from where this price point take off, now what we want to do is we want to draw some inverted fibs to this level. And I'm going to make this yellow so you have a clear distinction. Okay, so if we want to continue the long train, we really have to look around this trend line at the 61.8, even a small dip in below the 61.8. We really want to focus in on this area right in here, okay, if we're going to go long. So again, those of you that with me, we know that once price closes below the 100, if we were long, that is our exit strategy. Okay, because in over 89% of the, I'm sorry, 69% of the times, if price closes below the 100, it has a tendency to go down to the next level. And we can see here that happened already once, that happened already twice, and came pretty close on that time until it bounced off the trend line. So this trend line is going to be very important to look at. Not today on a Sunday. Okay, if you're coming back to trade London session, and again, I apologize, I am running a little bit of a cold, so let me grab a quick sip of coffee. If you come back to trade London, then what you want to look at is for that price action that might be sitting right here on the 1-hour chart. Okay, so as we dip into the 1-hour, again, you've got to respect this trend line area right here. As this moves up here, we are still bullish. Okay, we did not make a new higher high here, but this does not mean that the market can't open and shoot up and make a new high. Okay, so that's why the Sunday market open, unless we get a substantial gap, we just watch it and we start really looking at this tomorrow. We do nothing Sunday. You want to try and grab some pips on a London session. And then again, we have strategies for that. And we'll talk more about that inside the app. So again, you've seen here several rejections. And this is why we work Fibonacci so hard at the different levels, because again, we had that 61 to 88.6 rejection here. Okay, and if we take rid of that fib level, we can see that Fibonacci once again came exactly to that area again, right to that 61.88. So we're back here again. Okay, we're back here again. So the best thing to do today on a Sunday, okay, is just to let the market move again, unless we see a substantial. So for now, we are going to be trading between this 84.50 and this 82 area when it comes to crude oil. As we go deeper into Monday market open, again, we stream live every open, the US session inside of our group. Again, we will analyze this. But for now, we are still bullish on crude oil until we get a closure and a break below this 81, 86-ish area. And we see this pattern over here happen right over here. Okay, until then, this trend line could be respected. This 81.6 area could be respected, and this is the 100 level, which again, price has already bounced off here several times, both as support and as resistance. So we have to look at these key levels for a possible bounce and continuation up. We won't turn bearish until we close below this 81.86 area there. Okay, so as you have questions along the way, definitely drop back that question. If you're getting some value, drop that number 1 in the chat. And we are going to be moving on to another chart here in just a minute. Let me give a quick shout out to Henry S. First time here. Welcome, Henry. Hey, I love to see our great folks from South Africa. Welcome again. Hey, Pete, good seeing you. Hey, I appreciate the shout out. Love having you in our group. So love having you here. And this guy right here just did an amazing session today. We had a mastermind session with about 31 of our members. So you definitely want to check out his channel. He's breaking it down very basic. He's an integral part of our group. And so again, when you surround yourself with winners, when you surround yourself with like-minded people, it makes trading not only fun, but it makes it much, much easier. Okay. So thank you for being here on the live stream. Now, if you are brand new, again, welcome again. And let's go ahead and I'm going to save this chart. Again, those of you in the club, you do not need to worry. We will be sharing this chart. Let's go ahead and take a look now at what they call the Widowmaker. Let's take a look at natural gas. We've had some nice free falling on natural gas. Let's head over to our day chart and see what we are doing on natural gas. There does not need to be a corrective wave yet. Natural gas can definitely still slip much, much further down. Okay, so we want to look at this level right here that we are encroaching upon, just because we've had several touch points in both directions, right? Again, one of the key things to trading is squeezing the chart, because when you squeeze the chart, okay, you can begin to look over to your left. You should always be looking to your left to see what price did. So you can see here we've had support, we've had resistance, we've had support. So we are coming back down to that support level right in there. So as we look at the day time frame, okay, as we look at the day time frame, the first thing that stands out is we have now had 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles. Does that mean we due for a green candle? Absolutely not. So don't trick yourself that they can't have a 10th or 11th candle, because we saw that over here. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it happens. Natural gas is just a wild beast, and the way it moves. And I highly encourage you that if you trade natural gas, you should be trading this at a smaller lot size than usual. If you're on futures, like many of us are, right? Don't trade the full NG, trade a smaller lot size, because this thing could run. And if you're on the wrong side of it, you need to close it. And if you're going to hold on to it, you need to be in a good risk management position. So this is going to be a key level right here. What is natural gas going to do at about 2.23? Okay, if we draw a fib level from where this price took off to the high, we can see that, man, we are landing in our sweet spot, right? We are landing in our sweet spot to possibly get a leg back up on natural gas, because these kind of trades here makes it a lot easier to forecast. Because if you're looking at this support level, let's say right in here, right, we always want to go back up to the zero, and our stop loss will always be the 100% plus your spread. So I'll just put it here for now, because I don't know what everybody's spread is, right? So you're still giving yourself almost a 2.63 to 1 opportunity, because if this closes back in here, then we have the opportunity to possibly run this back down like we were a while back ago, that we ran all the way back here into these 1.5s in here, right in here in this chart right here. 1.4 was this low here. So we can come back to test that low. So if we break that level, okay, if we break that level, that can happen. So my advice to you is do nothing with natural gas at the market open. Do nothing with natural gas tomorrow. If it comes to this level, set an alert, which I'm going to set an alert right here, right now for our peeps. Okay, and if we get an alert here to happen, then I will let you know. And I need to have that bullish engulfing candle, but I would not trade natural gas at the Sunday market open, because usually in natural gas, there's going to be a very, very huge gap in one direction or another. Okay, so structurally, this is how it looks on the 4-hour chart. So we need to see what happens here at this key level to see if we are going to get the next bull run up from this level, like we did right in here. Any closure on a 4-hour level or lower, then we just come right back down to the next fib level, which is the 88. Then all we do here is we just adjust. We would then come in with this type of position. And eventually this has to be your exit. This 100 plus your spread has to be your exit, because if we get a candle to close below, then we're risking the 1.4s way down at the bottom on natural gas. So again, for today, leave it alone when the market opens. I don't trade the natural gaps on Sundays, even though they're large, because those can stay open for weeks and months, and there are still gaps that have not been closed since January of this year. Okay, if you got any questions about natural gas, you can definitely drop them in the comments, and I'm going to save this chart so I can get those out to our members as soon as this live stream is over. Hey, Drew K, what's up, buddy? Good seeing you again. All right, let's run through a few more charts in the time that we have left. All right, let's head over to, I wanted to take a look at our NASDAQ. Again, NAS made a new high this past week. You know, this thing has been on steroids for quite a while, right? The whole NVIDIA push has really moved this pair, this indice, extremely high. Okay, so we've now bounced off that trend line. So this is now considered a credible trend line because we have the three major touches that have happened: 1, 2, and 3, actually 4 touches. So this is a viable trend line. So again, many people are going to ask, well, should I buy NASDAQ here? My answer is emphatically an absolute no. Never buy the all-time highs, because when price turns, and if it comes down hard in the opposite direction, you will be stuck for a long time. You'll be stuck with a long for a long time. So I do not encourage you to buy the NASDAQ at this level. You would need some type of bounce off a level if you plan to go long. So let me give you the current levels that we are looking at on the NAS. And again, if you're not in the club, then go ahead and mark up these levels as you get these charts, because these are going to be vital levels moving forward within this particular week. So we have no level up here because, as you can see, this is just a black hole up here. So we have no levels to guide us from there. Okay. So in order to short crude oil safely, there's 1 or 2 reasons you can do it. If you're a swing trader and you want to start trying to stack positions right up at these highs, then you're saying, hey, I'm going to stack my first position here, and my goal is to be able to write it down because it does need a correction. In addition, we do have 2 unmet liquidity candles sitting right here. If you are conservative, okay, if you are conservative on the NASDAQ, this is your short position. You need to wait for a candle to close below basically 2135. Try to get that retest of the area and then try to bring it down to the next level. So that would look something like this, right? You would need this to happen on a 4-hour time frame. Forget the 1 hour, okay? You need to see basically here what this bullish engulfing candle did. The moment this candle here, okay, took off and closed above the area, look what it did. Came back to retest, and then we hit the all-time high again. Okay, so we need to see this price action down here on a conservative, if you're going to be conservative on a short. Okay, if you're an aggressive trader, right, this is where the aggressive traders live, because you start trying to guess where the turnaround might or might not be. And sometimes we do that, and sometimes it works out. Sometimes you got to hold the trade a little bit longer. Okay, but again, we are reaching this psychological number of 20,500. Again, they like those psychological numbers. So I would use caution that we will more than likely hit that level. So this is where I would look for some type of reversal up at about 2,500, okay, to come on down and then meet the liquidity that is sitting on this candle right here. There's a lot of liquidity. This huge push up, exactly with this huge push up, these were trillions of bankers' dollars that were brought into the markets, okay? They've already taken out the highs. Okay, so this comes up here. I will be selling up in this area right in here. So I'm actually going to put an alert here for my group, and I'll let you know once we hit that box. Okay, if we hit that box, we might even gap up to that box today. Then we will go short on the NASDAQ to not only fill the gap, but for that psychological level as well. So that is kind of the NASDAQ. Let me save this. Again, members, you'll be getting these charts here in just a minute. So definitely hang on. Hey, Henry S., I appreciate that. I appreciate the shout out. Welcome first time. Love to have you here. Awesome. Okay, so far, this is the best. This has to be the best profile image that I've seen. Not that you guys don't look great, and ladies, but I have a golden doodle. So this is the best. So Patches, welcome to the live stream, our little golden doodle. We've got a golden doodle named Molly, and she is absolutely sleeping right now. So that is the NASDAQ. Okay, we are going to go into 2 more charts, and then we'll do the rest inside of El Clubo. All right, so we are looking at gold, and we got some great value today from our good friend Brad, who's on the chat here. Okay, this again, this has the possibility of continuing bullish, and this could actually change the complexity of metals moving forward. Okay, so we're sitting on an 8-hour. We're going to go from this high point to this low point. Okay, and the reason that is that we already took out this high. Okay, you can see here we closed above the 61. So by all intents and purposes, right, gold is bullish, and now we wait to see if price comes up. Okay, do we get that back down and then heading back up for these highs here at the 100 fib extension? Okay, Brad did a great job today in the group talking about the extra Fibonacci extensions, okay, that you find right here on the trend fib extension that he uses for Elliott Wave, which gives you target areas all the way up here at what I have as the 127. So 2,500 is very likely, but of course, we trade what we see, and that is just a possible target, but we're not going long just saying we're going to go to 2,500. We are going to trade price action. Price action will always be king. So as we look at the 4-hour, we're kind of sitting right here. Okay, we closed just above this high. So we did take out, we did take out this high right here. Okay, so if they go and they trade zone to zone, then we're expecting, 2420 could be a very viable target in the short term. Okay, in the short term, this 2420 is a more than likely target, and I usually turn our targets blue inside of our club. So we will wait to see. We will let the markets open. We will let Sunday happen. We will let Monday London session happen, and then tomorrow morning we will begin to see on a higher time frame if we have a closure below or not. So for those of you that are in the club, and for those of you that are not in the club, right, you would then look for this right here. Okay, you would look for price to close and then come back up and then give us that push at least down to the next zone. Okay, that would be one if you can trade the retest. If you are an impulse trader, then this would be your setup. This is the last. Those of you know what I'm talking about. We're going to draw this structure point right here in orange, right? And then we will look to grab some pips on the impulse in a short position like this, assuming this is the high. Now, I don't know what's going to happen when the market opens, but if this goes higher, then obviously this is invalidated. This is just assuming if the market was stopping here and we saw signs of reversal, this is the way we would trade this. Okay, going back to this level, but we would take our 20 pips secure in position 1, and then we would trail position 2. Okay, that's the way that would look if the market wasn't closed right now and we saw the clear sign of a reversal on a 1-hour chart. Okay, so here's our 1-hour chart. So if we get that bearish engulfing candle, okay, then we're in. Okay, we're in. They left a nice wick here. They usually come back for these wicks, but this is only assuming that we get this right here. We get our quick 20 pips, we secure, okay, because price between here and entry is 82 pips. That's more than enough for one trade, right? So that would meet what we do with our multiple entries as we talk about all the time. So that is a possible. On the long side, okay, you would look for something like this to happen where price comes back, hits this zone, and then we are taking off to the blue zone more than likely. Okay, but again, 20 pips at a time, securing profits. Okay, so I'm going to get rid of this because we don't do anything on Sunday unless we see a viable gap, and we'll be getting ready for that gap in about 15 minutes. So let me save this, and if you have any questions, drop them in the comments. Now I'm going to cover two more. Let's cover GJ. Now GJ is already open. You can see here they're about to close this slight gap here. Okay, so let me bring this up. GJ had already opened, and this small gap here is about to close. So please do not take that trade now. We are beginning to possibly see the breakdown of GJ, but there won't be any major confirmation until we break that trend line. Okay, we really need that trend line to break at this level. Okay, if you want to stay conservative on GJ, we need some type of entry around here after we break and retest this particular area here. In the meantime, you either don't trade GJ or you go long on GJ. But I am not, with this high right here and this wick right here, right, I am not going long on GJ at this level. I would need to see a break above 206.44, with a close to go higher on GJ. Until then, I'm waiting to see what GJ does in this area because we are technically in this box here. Okay, we are technically in this box. But again, for those of you, in the group that you want to scalp, here was a great example how this would have been a nice trade setup right there, the break of that structure. Okay, right in there. Okay, and obviously this was a Sunday gap, so it did not count there. Okay, or you could have done the trend line strategy right there, broke trend line, and then we went down and we dropped a good significant number of pips. All you need per day, that's 50 pips. All you need per day is 20 pips a day. If you can grow an account for 20 pips a day and just increase your lot size, you do not need to be in the market. Greed will not keep you in this profession for a long time. We all had to learn the hard way. If you want to be around 8 years later, you've got to work on your trading psychology, because if you continuously make money and lose money, this will not be fun, and you eventually just pull out and go do something else. So this is all that when we talk a lot about this in the club, your psychology is more important than hitting buy or sell. Okay, let me save this. And then lastly, let's take a look at, somebody wanted to see Euro USD. So there is a gap on Euro USD. And this is kind of riding that exact same structure here. I like the 1 hour structure. I'm going to bring that here because we did see that we had a touch, so a valid trend line, but then we gap lower. So what's going to happen with Euro USD on the 1 hour? We need to see what's going to happen at this level right in here. This is going to be a very important level. But once we close, if you want to be safe, once we close below 1.07835, okay, then we can possibly make that push for that next swing back down to these lower levels. And of course, you always want to check the DXY as you are moving down. So if you need to mark up your chart, you definitely want to mark this up here and see what happens. Okay. Once we get a 4 hour candle to close above, you should be going long to this high right here. And I'll make it blue. That would be the target. If you get a 4 hour candle to close, okay, then you're looking for this price action here to go up. This price action, right? You're looking for a candle to close, retest, and head back up to the blue line if you get that right in here. In the meantime, you're just letting price move. And once this comes back down below this line here, if you want to be an aggressive entry, you can actually do this. The only problem with taking a short here is that you have a support level right here. So let me see how many pips that is. If it gets you your 20, go for it. Yeah, it's not worth it. Okay, so better is to wait till you get clearance here. It's not worth it. You're better going here because at least this is more viable. This is probably 40 pips. Yeah, 35, 36 pips there. So I would wait for structure to break here to go short. In the meantime, let it dance up here and we'll see what it does. So these are our two options. We're waiting for this or we're waiting for this. In here could be very tricky. Okay. Now, if you know how to scalp, plenty of opportunities to scalp on a 15-minute chart with some of the strategies that we've talked about. Just very simple structure breaks. We've got our 3 candle rule. Okay. So if you want to scalp, but again, this is a live chart and this is an open gap right now on Euro USD. Okay. All right, awesome. So, hey, I hope you got some value today. That's it for me. Again, I am running a little bit of a fever, not feeling great. So I'm going to join my group in the app. We'll do some quick gap analysis, see if there's anything major other than the JPYs that we saw here. And then I am going off to bed early today. Hopefully you'll feel better tomorrow because we do a live analysis at 8 a.m. Eastern Standard Time every morning inside the group. Hey, thanks for watching. If you got some value, you know what to do. Hit that like button. If you're brand new here, welcome. Come back. Check us out. Feel free to share this live stream or any other video. Go into the playlist. There's some amazing stuff. If you really want to learn crude oil, if you want to look at some of the strategies that we're using for crude oil, there's plenty of videos in that playlist that can help you get started. And if you want to take your trading to the next level, if you want some, free coaching, personalized chats, video courses, live trading, trade alerts, we have all that in an app. Android or iOS. You can use it through a web browser. Again, for less than $1 a day. Come on in, find out what the other members are saying about it, and I think you will be blown away with what we're doing. And we got great people. The community is made up right now of 242 traders. And we just started this 7 months ago. And we have some amazing people from all over the world, all different countries, from Indonesia, India, US, Canada, Slovenia, Portugal. We have some great people in there. They'll definitely connect with you. They're forming little private trading groups. We got people trading stocks. We got people trading options. So you can come in and get a little bit, but really you want to specialize in one thing first. You don't want to be all over the place. You don't want to do buffet trading. You don't want to do shiny object trading. You really want to focus in on 2 to 4 pairs, master those pairs as good as you can for at least 6 months before exploring something else, right? So trying something for a day or 2 with bad luck doesn't mean that you're a bad trader. Just means that you didn't analyze right that particular day or news came out. So you've got to give yourself time. When you come in, I'm going to give you a growth chart. I'm going to give you a 2-year plan for you to grow your charts or grow your accounts from $200 or more. Very conservative, 0.5% to 1%. That's it. That's not sustainable. These people that are trying to make 8, 9%, that is unsustainable in the market. Okay. I don't care who you are, and I don't care how much money you have. That is unsustainable in the markets every day. But if you can come in and learn how to make 1 to 2% a day, okay, and then eventually it might only be 2% a week as you grow your account, because psychology is real in trading. So we want to help you. We want to guide you. We want to mentor you. We want you to be a part of our group. Come on in and check us out. Thank you for watching. Love seeing all of you. And Pete, I appreciate you. I appreciate you. This guy right here, make sure that you check out his channel if you want to learn a little bit more about Elliott Wave. Hey, Patches. Thanks again, man. I appreciate it. Pete, I appreciate it. I appreciate it. Awesome. Awesome. Hey, Drew, I appreciate the shout out for that. All right. I'm out to save my voice. I'll see you all very, very soon.